Hello, my name is Rachel and welcome back to my channel. In today's video, I will be covering the 4 major changes that I am making to my stocks and shares or investment ISA within this financial year. So I've really gone through it all and figured out what I want to be doing long term and what will work best for me personally, and then made 4 big changes. So in this video, I'll be covering all of those 4 changes, which include increasing the number of ETFs I have, really focusing down on fees, adding it to some positions that have dropped in the recent months, and then also adding some real estate investment trusts or REITs as well. So if you are particularly interested in any of those areas, then I will put timestamps down below so you can skip to them, but otherwise please watch this video in its entirety and hopefully enjoy it. Okay, so the first big change that I've decided to make for this financial year is to focus on investing in more ETFs or index funds or passive funds, whatever you would like to call them. So if you've watched any of my videos before, you'll know that I was quite heavily invested in actively managed funds and trusts, and that still is the case. There are some actively managed funds and trusts that I do want to stay invested in and have invested more money into, but I wanted to increase the volume of ETFs that I had in my portfolio as well. So I've brought the percentage volume of ETFs that I have in my portfolio up to 30% now. I've also added a couple of really interesting ETFs, which I will share on another video actually, because I'm going to share my whole investment ISA portfolio probably in the next week or 2. So if you fancy subscribing, then please do, and you can check out that video. So yes, I've really focused on upping the volume of ETFs I have in my portfolio to really make the most of those low fees, and also because the market has been particularly volatile in the last few weeks, it makes me feel more comfortable that I do have that security of having a few more ETFs in my portfolio. Okay, so the second big change that I've made is really focusing on fees. So this is something that I was doing already, but I think it's become more clear to me over time. And as I've learned more about investing, as I've been doing my investing exams, I'll share a video on that if you're interested. And as I've learned more about obviously compounding and the difference that fees can make to your portfolio, I've tried to really knuckle down on the fees that I'm spending on my investments. Now I've got a specific example of this for this video. So I was invested quite heavily in Polar Capital Global Technology, which has done very, very well for me in the last few years. However, I've decided to replace a proportion of that investment with a couple of ETFs that I feel perform as well and historically have performed as well, but the fees are that bit lower. I haven't sold my complete Polar Capital Global Tech position, but as I said, I have sold a few £1,000s of it and replaced it with 2 ETFs that I think could do a similar job. They're both tech ETFs. So they are the Invesco Markets Nasdaq 100 or EQQQ. So the fees for that are 0.3% as an ongoing charge, whereas just to say for Polar Capital Global Tech, the fees were over 1%, so they were 1.11%. And then the other tech-focused ETF that I've added in as well is the Ishares S&P 500 Information Technology Sector, which is IITU, and the fees for that are just 0.15%. So I'm going to be holding on to these 3 specific tech investments, and I'm going to have a look at how they perform over the coming year or 2, and because I will still have that proportion of actively managed fund in Polar Capital Global Tech, I'll see how it performs against these ETFs or index funds, and maybe take a decision in a year or 2's time as to whether I choose to continue investing in those ETFs or whether I sell off the remainder of the Polar Capital Global Tech. So the third thing that I've decided to do in my stocks and shares ISA is to add to positions that have dropped recently. So as it's a new financial year, you get the new allowance of £20,000 to be able to invest tax-free in your investment ISA. So I have added some money into this account, and what I've decided to do with some of it, as I said, I've added some ETFs and made some changes, but with some of it I have decided to add 2 positions that I think are still really, really strong that have dropped in recent months. So I have a separate video, for example, on Bailey Gifford funds, which I'll I'll feature here, but I have added to two of my Baillie Gifford positions. They are investment trusts, and I think although they haven't performed well in recent weeks and months, for me personally, feel that I still want to stay invested in them, and actually it's a good opportunity to invest more. I'm absolutely not saying you should be investing in them right now. I'm absolutely not saying that they're the right investment for you, but for me personally, this is a decision that I wanted to make. Please always do your own research when you're making your investments, because your ideas on investing might be very, very different to mine. So yeah, I've added two of my Baillie Gifford positions, and then I've added to two other positions as well. So the Baillie Gifford trusts that I've added to are the Pacific Horizon Investment Trust, which is PHI, and I have also added to the position I have with the Scottish Mortgage Investment Trust, which is SMT. So for me personally, long term, I think that they could continue to do well, and hopefully in time will pick up. So I wanted to add to these positions despite the fact that they have dropped in value in the last weeks and months, because I still think for me they are good long-term investments. And then the other two positions that I have decided to add to, the first one is the Montanaro European Smaller Companies Trust, or MTE. This is a position that I have held for probably around about a year now, and as I said, it has dropped slightly in the last few weeks, but it is one that I want to hold for the long term, and that price drop has made me think, actually I've got some money to invest now and I would like to invest more into MTE. So I've added to that position. And then finally, the last position that I've decided to add to is the Lion Trust UK Microcap Fund. Again, this is an investment that I've held over the last year or so, and as it's currently dropped a little bit, I would like to add to it. So those are the four investments that I've decided to add to in my investment ISA, despite the fact that in the last few weeks they haven't done particularly well. I think it's always really important, if you think long term that an investment is a good one, it is still probably a good one, and if you are able to add to that position, if it feels right for you and the timing's right, then it can be a good thing to do. Obviously, if you think an investment is a complete dud and you don't want to be invested in it anymore, I'm absolutely not saying to continue into investing into something that's not doing very well and you don't think it's going to recover. And then the final fourth point, or the fourth change that I've made to my stocks and shares ISA, is that I have added 3 real estate investment trusts. The only property investment that I have at the moment is the house that I'm sitting in, which we have a mortgage on. So I didn't have any real estate investments, and at the moment I don't think we're in a position to be able to buy a buy-to-let, for example, or anything like that. So I wanted to add a small amount of real estate or property investments into my portfolio. So I specifically wanted to focus this on industrial or warehousing investment trusts, or REITs. So those are the 3 that I've gone for. I do understand that this is a very niche investment. The REITs are also quite a complex investment compared to investing in, for example, an ETF or an index fund. So I think, as always, please go away and do your own research and check that they're right for you. But I will share with you the 3 that I have chosen. As I said, these are investments that are right for me, that I wanted to add to my portfolio. So I'm definitely not saying go away and invest in them as well. So the reason that I decided to focus on investing in industrial or warehousing REITs is because at the moment I think it's an area that can only continue to grow. So this is investing in warehouses that might hold things for companies like Amazon. So I think warehousing, can only grow and continue to do well, but we shall see. I'm absolutely not an expert on this, so please don't take this as advice. So the 3 REITs that I have added to my portfolio are, first of all, the Warehouse REIT. Nice simple name. The symbol for that is WHR. Now, what I will say about these REITs is that they have very high fees when you're comparing them to index funds, and they have quite high fees when you're even comparing them to something like an actively managed trust. So the fees are for this one 1.4%. So again, really consider whether this is a good investment for you because those fees are quite high. The second one that I've decided to invest in is urban logistics. So the symbol for that is SHED, or SHED. The fees for that are 1.38%. So again, high. This last one has got lower fees. It's the Tritax Big Box. Says what it does on the tin, I guess, big boxes. Who knows? And the code for that, or the symbol for that, is BBOX. And the fees for that are 0.79%. So I've just added a small amount of these 3 different warehousing or industrial REITs to my portfolio. Now, because this is a new area for me, and because it is quite a complex investment instrument, I have not invested a huge amount of money, and I have decided to spread it across those 3 different REITs rather than just going all in on one. Hopefully it goes well. I will share portfolio updates on this channel, so if it doesn't go well, you will find out about it. Thank you so much for taking the time to watch this video. If you have any questions, as always, please do pop them in the comments down below. I try to get back to every single one of you. And thank you, as always, for taking the time to watch and comment too. I appreciate it, and have a really lovely day. Bye bye.